Director, Absa Zambia PLC, the Country Management Committee. I'd like to welcome you to the 6th edition of the Absa Africa Financial Market Index here at Mulungushi International Conference. I'll host you this afternoon. My name is Ndela Sichizia from Absa. Without further ado, I'd like to disturb the few people having lunch that will be abstaining for.
Stand and sing of Zambia, proud and free, and of work and joy in unity. Victors in the struggle, right. We on freedom's fight on, strong and free. Africa is a land fashioned with and blessed by God's good hands. Let people join as one, brothers under the sun, and strong and free. When the nation is upheld, unity and peace is stars, like a noble eagle its flight. Zambia, praise to thee, oh, strong and free. Praise to God, praise be. Let's our great nation. Under the flag of Zambia, strong and free.
We were just celebrating our independence yesterday, and I saw people struggling to sing the national anthem. Is it because we had a rather unfamiliar rendition, probably? But I take it we all did take part in the celebrations of independence. To Jeff, welcome to Zambia. Hope you found yourself in some place where at least you saw what was happening yesterday. We welcome you. At this point in time, we'll have a short introduction by way of a video to just take us through what we will be looking at this. Thank you.
So the Absa Africa Financial Markets Index, we first started talking about it in 2016. The first edition launched in 2017. And with that, we're looking for something as a Pan-African bank, as a Pan-African investment bank, something that we were passionate about, something that we really thought could contribute to the quality of the discussion across the continent, and ultimately sort of lay the groundwork to raise the living standards for all all who live here on the continent. And we thought that coming from a banking background, it really was financial market. We're accustomed to people focusing on the idea that it needs lots of investment. What we want to do is generate that discussion that really reflects on, well, what do we as a continent need to do to make it easier for that investment to come? And not just those investments from overseas, but also the money that's continent, how best to put that to work. So there's been a couple trends that we've seen since 2017 as we've moved through the years. One of the most prominent ones, and maybe in a way that was a little embarrassing, in the first year index, South Africa came top across pretty much all of the pillars. And what we've seen in this space is that other countries have been catching up pretty hard. And as we sit here for last year's index, this year's index, we find that South Africa tops only about half the pillars. So that's one of the key things that we've seen. One of the other bits I think that's been very interesting and exciting is that away from things perhaps like GDP growth or how much things that the regulators and have in their direct control, almost universally, we've seen scores on that rise over time. So that's telling that policymakers and regulators really are focused on generating markets that are open and transparent and accessible. And then maybe the third thing that we've seen is that each year we have more countries to join. So this year we're very excited. The countries that join complete sort of our complement. So we have Zimbabwe joining, we have Madagascar joining, and then we have the giant of Democratic Republic of Congo joining. So as I say, that brings us to 26 in total and really fleshes out sort of a commitment to having a broad range of countries, from the economic giants, whether it be South Africa or Egypt or Nigeria, to some of the minnows like Seychelles or Malawi. There's really a very broad mix inside the index.
Thank you very much. And to just further unpack the topic for the afternoon, allow me to welcome our Director, Global Markets, Mr. Stanley. Distinguished ladies and guests, simply say all protocols observed. I'd like to welcome you to the 6th edition Financial Markets Index. So we've been running this for a number of years now, and indeed, this is an opportunity for us to have this discussion, especially looking at and following some of the developments that have been happening in our market. So it will be a session. We've got an interesting panel that is lined up. The session, we will go into a little bit detail and give yourselves, our audience, an opportunity to be able to ask some questions as part of the discussion. So my task here is very, very simple. It is basically to call up the Managing Director of Absa Bank Zambia, Mrs. Mizinga Melo, to come and actual opening remarks.
Thank you, sir. And Stanley and Jeff, thank you for the introduction. That we not Jeff was describing all the countries to see there. Afternoon to all our clients. Thank you so much. Your session, it's a very intimate session with this more, so that you can have you are able to have a conversation. Please welcome our guest of honor, who is Mr. Mikuli. Thank us this afternoon. We're very glad that you are able to join us. We also want to acknowledge who I'm sure will be introduced a little later, but still his thunder by introducing. Let me just say we have a very powerful, distinguished. Whether there's a lady, but it looks like, is there a lady? There's a lady. Okay, there's a lady. Okay, thank you. Distinguished lady and gentlemen. Sometimes as ladies we feel they just put one there. Nobody blames them, you know. So we have one lady and gentleman. So we're very proud of you. But uh, may I simply say my colleagues from from Absa, our clients, as well as members of the press, may I simply say, ladies and gentlemen, a very good afternoon. This will be quite short because we will get a lot of the unpacking of the financial markets index from the conversations that we're going to have. But may I just, this is the index that we're having, and so we can meet and have the conversation. But like Jeff said, macroeconomics as well as government, that point this year. And this is really good because it just means that we've gone up in terms of how we are performing. It's also good that the year, so it just means it's a well representative represented index that we're looking at this year. But also when you look at the biggest improvement, it actually came from pillar 5, the central bank in our midst, who's part of our panelists, but one of the positive loans has improved, also declined. So obviously, we're doing something right there, by making sure it is responsible. We're very, very proud of. I think the other point to note is obviously the exchange rate. The exchange rate has continued to appreciate. Um, so we continue to lot to do with investor confidence, more investors coming in, so that investor confidence really, really well, in addition to many other factors that, by the team. But it's great to see that this investor confidence a big factor to play when it comes to the stock market capitalization actually increased to 20.2% of the GDP. So it's also good to see that not only in other areas, but also really investing in equity as well. That too has improved. So our ranking has actually done very well, not only on the macro, uh, the index in terms of how do we come in. As Absa, it's just for me to say thank you. You are busy. You made it to really come and support us, but also hear how you can support your businesses that you hear from the panel. But really, for me to thank you so much for choosing ABSA. Thank you for banking with us. We are so grateful, and I think I'll just by handing over back to Stanley or Mandela as we as to the real meat. Thank you.
Thank you very much, Managing Director. Ladies and gentlemen, distinguished guests, our very able panel. It's about that time that we get to know who will lead the afternoon. And at this point, so I will call upon the panelists, and your seats are ready. The to the discussion online, yes, we are in Mulungushi International Conference Center, the KK Wing, at the Absa Africa Financial Market Index 2022. To the discussion or the panelists upstage, I will invite the Permanent Secretary of Finance, Mr. Mkuli Chikuba. Let's welcome them. So you will take the first one immediate left. Coming on second is our keynote speaker in the afternoon, who is our head of research at Absa Group, and this is Mr. J. Also coming from the Absa Group, we've got Anthony Kirui, who's our head of global markets. Welcome, Anthony. And to share a seat with Anthony, we have our only lady panel this afternoon, and that is Charity. No stranger to these kinds and businesses. Is our director from the Central Bank, Mr. Isaac Mohang, Financial Markets. And in such discussions, name not strange to anybody, Professor Oliver. On the visa from the Securities Exchange Commission, which is and to help moderate the discussion, our director, global markets, mics are set, they are on, and over to you, Stanley.
Are you able to hear me well? Your voice. And you always think, I don't sound like that, do I? Thank you, everyone. My name's Jeff Gable, as introduced. I'm lucky enough to be chief economist of the group. I'm also lucky enough to be able to come here and unpack the results from the Financial Markets Index, and that should provide some meat that this that the index is all about. So within that space, just some quick opening. First and foremost, just to remind, the Africa Financial Markets Index, it's not about which stronger future. That when we said about the index, we have a very clear editorial take that markets and that are accessible to get stronger. The Absa Financial Market Index it's a set of data, so we generate the seeing day. Almost like we'll be having an in-country launch for 2022. about a year ago, right? Among countries have done better and where they could do a little bit more. But the exciting thing is it really doesn't matter where we're looking at on the continent. In the 26 countries we measure, positive things are being done kind of everywhere that we look. So in Zambia's case, for example, what I wanted to highlight here was maybe the work done at the Lusaka Stock Exchange around the GEM project, right? Being able to enable more money and more savings to go to small and medium-sized enterprises. Elsewhere on the continent, we've got sort of key equity IPOs. So in Lesotho, their very first IPO on their exchange, a property company. We have in Angola, one of the big banks issuing. In Namibia, a state-owned telecoms company raising $150 million in capital, and their largest fundraising on that market ever. There's also been lots of stuff on the continent around ESG. So for example, Kenya and Mauritius joined South Africa and Egypt for financial reporting. Climate stress testing is now sort of a formal part of the requirements in those countries. You have in a couple countries, Eswatini, for example, more formal guidelines so that companies that are doing their financial reporting give ESG investors the information they need in the format that is common so that people can assess sort of the opportunities and risks. And then for the financial market index itself, we've also been innovating, right? We want to be open and transparent and accessible like we asked from countries. We want to be moving forward like we asked from countries. So in that space, we changed some of the data a little bit. It gets a bit technical, but some things we aren't measuring anymore. So things like per capita GDP has fallen out of the index. Some new stuff we're measuring. Inflation, it's very topical and causes strain across the continent. And we've adjusted some of the measures in that space. As we heard a little bit earlier from Mazinga, we're really pleased with 26 countries in the index now. We cover almost 80% of the population. We cover more than 80% of the continent's GDP. And one of the things that we get, and it'll be less obvious perhaps in Lusaka because Zambia's been in the index since day one. Each year when we launch, more countries kind of put up their hand and say, you know what, we'd like to be part of that discussion. And so one of my takeaways over the last few weeks is probably as an index, we need to focus a little bit more on some of our peers in North Africa. And so we'll see if next year we're able to add that. Similarly, though, ESG, we've embedded in the index in quite a positive way over the last 2 years. Digitalization, sort of digital currencies, different ways of using mobile and connected devices. I think that's going to become a bigger part going forward. There's a question here just on the scoring, of course, and within that space, right, we measure lots of stuff. If you have the paper report in front of you, the inside to back cover gives you some detail on this, but effectively we measure more than 40 things. Some of them are really quantitative in nature, some are a little bit more qualitative, so we tend to shy away from that because it always raises kind of more questions sometimes than it does answers. But within that space, you also see that there's no obvious way to measure open transparency and accessibility in a really easy way. So we've got all these concepts coming in. We organize our thoughts around these 6 broad, we call pillars. You can think of them as themes. So we want to think about market depth, which is around what products exist on financial markets and how are prices reported and how do they trade. We want to think about access to foreign exchange, right? And that's not just about the liquidity of those markets, it's access to information around foreign exchange and things like foreign exchange reserves as well. So that's our second theme. The third theme in this space is around transparency in the tax and regulatory environment. ESG is in there. Credit ratings are in there. You have tax regimes and withholding taxes and others. We try to measure in that way. The fourth pillar is sort of the size of, and the idea here is that a vibrant local investment community not only helps ensure that the money that is saved here in Zambia gets put to work here in Zambia, but it's also easier for a country to position themselves as attracted to foreign capital they can show a vibrant domestic market already. And then the last of the two pillars, one around macro, which isn't just the economics, inflation, and growth and the quality of the banking system, but it's also about just, is information available in a timely manner, and is there enough transparency around it? And the last of the pillars is around legal standards and sort of collateral and others, and it's a little bit sort of less sexy, I suppose, than the others, but it's absolutely critical for the smooth functioning of financial markets. Within that space, and thinking about the overall scores, our top three countries this year are the same as last year. South Africa leads the index, followed by Mauritius and Nigeria coming up in third place. And you can see different ways of parsing these results in the paper copy from pages 7 to 11. You can see how we look at this in a little bit more detail. But I guess the critical point here is it's not a medals table. So it's not sort of gold, silver, bronze, and everyone else needs to do it. The critical component, and again, Nzinga touched upon this in her opening comments, what we want to see is a lifting of all countries in this space. And so what's particularly appealing, I think, in terms of this year's answers is, notwithstanding the very difficult global environment, real challenges domestically in much of the continent, 19 of the countries, every country that you see on the screen that the country name is underlined, all 19 of those countries saw their scores improve, even in this very difficult environment. And this is a real indication that even though markets liquidity may turn against, even though inflation in many parts of the continent and the world is higher, focused policy making, focused regulators can make a positive difference, and we're absolutely seeing this. A shout out to the countries in the index that improved their scores most in the last year, and that's Seychelles and Kenya, Namibia and Uganda, all increasing their scores by about 6, and so fabulous news there. And then for the new entrants, Madagascar, DRC, Zim, you'll notice that they are a little bit to the right of this graphic. Financial market developments at an earlier stage, in many cases in those markets than others. But that's why being engaged in the conversation is, if anything, more important there than it is sort of for the rest of us. For Zambia itself, you'll see that we are a little bit mid-table. Position-wise, 12th this year, 12th last year. Score improving this year from what it is last year, but showing that kind of in a world in which everybody's improving, in some ways you got to run just to stand in place. It's interesting if we think about the transformation for Zambia's score over the last number of years. You will see we're back on an uptrend right now after this period, the previous few years, where frankly the score had gone a little bit in reverse. If you think about the things that we measure, right, particularly on the macro pillar or market cap, it kind of makes sense that during the very difficult economic period, during the very difficult market period here, there was some deterioration in the score, but it looks very much like we're starting to come out on the other side. I want to spend just a little bit on each of the 6 pillars, but I want to go through this fairly quickly because it's the discussion of the panelists where the real value will be had today. Around the first pillar, South Africa top in this space, just the size of the financial market, and our southern neighbors just much bigger than anywhere else. We're Zambia 15th place, a fall of about 5 points in 4 places. More broadly across the continent, we've seen equity market caps lower now than a year before. That's a global phenomenon, but Zambia was one of a half dozen countries that actually saw their score on that part of the pillar rise. So that's particularly impressive. Then thinking about the broad themes here, again, I'd mentioned Angola and Lesotho was their first IPOs, but that's sort of making the competitive environment in terms of the scoring that much more difficult. And we've also seen market depth around new products. 9 countries in the index introducing entirely new classes of financial products over the year in which we measured. In Zambia is one of those. 9 countries with brand new products in that space. We don't measure things like central bank digital currencies yet in the index, But it's really fascinating to see what's being done there in countries like Nigeria, of course, which introduced the e-naira more than a year ago, in Ghana, Kenya, South Africa, and others. In terms of the specifics for Zambia, well, I suppose what drives that score, the overall score, fell a bit in the first pillar. Part of that is just around liquidity, and that's natural. It was around the sovereign bonds that in the previous period had traded at astonishing levels, and for which trading levels in those sovereign bonds have normalized a little bit. Positively, equity market turnover had actually increased in the last 12 months, and that's quite favorable in this space. And then in terms of market capitalization, a more positive story in Zambia, where markets are simply worth more than they were a year before, and that's unusual this year in the index. For most countries, they've gone backwards in that regard. Areas for improvement, and I think these are the bits that we're going to pick up on probably as a panel. The corporate bond market here is still pretty small and light. On ESG products, I think there's more to be done, but I'll touch on two pillars about some exciting news here in Zambia that I think has relevance there. And then the repo market itself is also pretty small as well. So those strike us as in the index as being sort of low-hanging fruit in order to think about lifting Zambia's score in the year ahead. Second pillar is around access to foreign exchange. It's around the liquidity on interbank markets. It's around sort of the level of foreign exchange reserves. In this place, Zambia has essentially moved up one position in the index to 19th. It's increased by 5 points in that space. Across the index, everyone's being hit by lower FX reserves. So in the case of Zambia, actually, in a measurement period, we went up a little bit, but Kenya and Uganda are the real standouts in this space. More liquid FX interbank markets moving up the scoring from where we were. In terms of the details for Zambia in generating that 19th place overall, the positive news is that the reporting standards around exchange rates, the relatively few capital controls, scores the country quite solid marks in that part of this pillar. Also on FX reserves, right? Thanks in part to the IMF, but also some recovery from the crisis. What we've seen is more liquidity in that space, and both of those have really helped boost the overall score there. Areas for improvement, FX reserves are higher, but they're still significantly lower than sort of global norms, 3 or 4 months of imports in that space. Interbank FX turnover certainly still seems to be modest, and that makes it more difficult for corporates and others to do normal importing and exporting business. And then some stuff from the regulatory side. We're seeing more and more countries across the continent adopt sort of the global FX code. And certainly one of our discussions that we would have with countries is sort of the benefits of doing that more broadly. On the third pillar, which is about transparency, the tax and the regulatory environment, the score is up for Zambia by almost 5 points. The trick is that other countries are increasing their scores in some sense even faster. So in fact, countries slipped a little bit in ordinal placing, but still a top 10 position in that space. Overall in this index, we've seen really exciting, in this part of the index, we've seen really exciting outcomes around ESG. 5 more countries than last year have policies focusing on products in that space. You have codes of practice, sort of ensuring that companies report in a common standard being introduced in places like South Africa on the JSE or the Namibian Stock Exchange. I'd mentioned in my opening comments the climate stress testing for countries across the continent that now being a formal part of financial reporting. And then here in Zambia, it occurred after we'd finished writing the report and after it went to the printers. But the news in the 2023 budget that there would be incentives around withholding taxes for term ESG instruments going forward. It's exactly those sorts of things that we look to measure and promote in the index. So it's really exciting in that space. Less favorably across the continent, we're seeing more countries have less favorable tax environments, increasing either withholding taxes or capital gains taxes on securities instruments. And of course, that just puts more sand in the wheels of finance. For Zambia itself, on the credit rating side, and we think about this in two ways. Sort of any credit ratings are better than no credit ratings. And so in this space, the number of corporates in Zambia that have got credit ratings has doubled, which is fabulous news. And we've also had really favorable scores around sort of financial information transparency, around the ESG incentives. I say with the budget, it looks like we'll score even higher next year, and around adopting global accounting standards. The areas for improvement, well, as an index, right? As an index, shown upon withholding taxes, security, full stop, and higher rates down on more. In terms of climate stress testing, we've got 4 countries on the continent with that as a formal requirement. We expect to see more progress in the years ahead. And then while we have a number of corporate credit ratings available here in country, we also make a separate mention of those corporates that are being rated by one of the big global 3s, whether it be Moody's or Fitch and S&P. And on that space, our sense is that Zambian corporates can do a little bit more in that space. Moving to the 4th pillar, the capacity of local investors. Well, in that space, Zambia fell 8 places to 23rd. That's really a consequence, right, of trading on the domestic market across the index. Countries were under pressure here on the pillar more broadly. Pension fund assets across the continent fell by an average of about 11% in that space. And then more broadly, right, for many countries on the continent, pension fund assets are woefully small. So we have 17 countries of the 26 we measure where pension fund assets per person in the country are less than $200. And here in Zambia, the official statistics show that it's less than $50 per person. And so there's an awful lot to be done here. Compare that less than 50 to your neighbor to the south in Namibia, where pension assets per person are almost 5,000. Botswana, more than 4,000. Mauritius, more than 3,000. So there's a big gap here where certainly more can be done. On the plus side, and it's not formally measured in the index, certainly we see lots of evidence of moves around financial market literacy and financial market inclusion across the continent broadly, and certainly here in Zambia. So there's some exciting stuff going on here around financial education, but there's also some low-hanging fruit. As I say, that's just finding the incentive structures to put in place so the local asset management community, the local pension funds become a significantly larger player. And then the last 2 of the pillars before I hand off, one is just around the macro environment. In this space, I'm really happy to say that Zambia was the single largest improver from all 26 countries in the index over the measurement period, right? Helped by one of the 3 countries that has inflation lower this year than last. And frankly, not just if we think about on the continent, if we think about globally, there aren't too many countries that are in that bucket of inflation lower currently than a year earlier. But helped as well by broader improvement in macro conditions in that space. So when we think about this, it's around the macro data standards. Zambia gives a pretty good quality data at quite a friendly frequency. Non-performing loans in the banking sector have fallen as the economy has started to move out of the very difficult economic period it found itself in. And as I said, inflation itself lower. Where's the low-hanging fruit? So I don't need to tell you that external debt is a very particular subject here in the country, but our expectations is that progress is being made on that side, and that's really a discussion around restructuring. And then the very last of the points is around legal standards and enforceability. South Africa and Nigeria sort of vie the highest point, but as part of the index, we don't, broadly speaking, we don't measure countries' intentions for any of the pillars. It's only when new stuff is in place, new regulation is in place and working, new policies are in place and working. And in this space, the great news is we've got a half dozen countries that are looking to improve their scores on this pillar actively, but in a practical way, the scores are exactly the same as the year before. For Zambia, what are the focus areas, I think, if you want to see scores improve here next year from this year? I guess the single biggest thing is increased use of sort of global master agreements in that space, and I think we'll discuss that. But for me, in my opening remarks, that brings that to an end. Thank you very much, and let's move to the panel discussion. Thank you all.
Hello. Okay, all right. Thank you very much. And dear guests, I will be your moderator this afternoon. I'm sitting at the far end. I'll try and look at each and every one of the panelists. Reminder, my name is Stanley Tamele. I am an economist as well. So this opportunity to some of the questions. Yes. To what is subject matter in. So without further jump to my first question. This one I'm going to direct at Anthony. Just basically, why should the average person, why should every person in this deal?
Thank you, Stanley, and good afternoon, ladies and gentlemen. I think personally, I see bankers, and particularly somebody working in the capital financial market space, often seem a little divorced from reality on the ground for the individual citizen. But very much the foundation flourish to grow. And in many ways, that's what this index speaks to. It speaks to the structures, the regulation, the trend of the environment in which we're operating in order to support the growth and deepening of our financial markets. Jeff spoke about the sector, deepening savings, the capacity to investment can be through products and tools and instruments invested. So the availability in support of this. ESG is not just about green finance. There's an element of social behind, very much on people and how you support people in our various economies. Here in Zambia also flourish, and in many ways this index the institutions and what they're doing. Regulators are working with institutions gathering savings and deposits, participate, key to how they actually help the common man, the individual, to actually thrive. And so I do level how we as bankers gain our redemption, because what is our contribution to society? In many ways, an index like this allows the financing of schools and hospitals. How does capital become resilient locally, in our local market, so that they can also be attractive to global investors? How all the dots connect.
All right, thank you. Now jump into pillar one. So my first question goes to Ms. Please, now that we've heard why we should care about the index, right? My question is basically as follows. The Zambian financial market has been referred to as lacking depth, the small product base, which is relatively vanilla. How can the market increase in sophistication, in development? For instance, things if repo market, which is something we've struggled with, basically grow in development and.
Okay. Thank you, Stanley, for that question. Indeed, I think I've come to describe our market as rudimentary. You would be pleased to note that we have been making baby steps towards making this market sophisticated. But I think where I see it, if we are to talk about sophistication, this about how corporates and any other participant in the market defends themselves against the vagaries. They protect themselves against financial risk is through hedging. And we don't have many hedging instruments. Why? I think for a lot of also realize that it has been beset every standard hedging instrument that you pick up, you will see that interest rates play a key role. Very often, I think the complaints from the corporate world and those that hedge themselves against things such as interest rate risks is that the price of hedging is very costly to do that. Why? Because interest rates are wild. So ultimately, it boils down to the issue of demand for those hedging instruments. More people want, you see that kind of sophistication naturally come through. The thing you also would understand is that stability matters again in all this. You see, when there is chaos in the financial markets, everybody do and they innovate in anything they can hedge. So just to step back, during the height of crisis, I think where it might have started much more magnified during the period is that demand for foreign currency, for instance, increased. And then there were those participants who had a need for and who probably joined the game because they wanted to speculate on the currency. Okay, so despite the fact they are all coming from macroeconomic environments, behavior from the participants also add to the. Now, how did people that period hedge against such things? Of them, I think what we observed from the banks and from elsewhere is that there was this front loading. So if the currency tomorrow will be X% higher than what it is now, what do you do today? You want to buy. Okay, so you stockpile even when you don't have a need, even if you're payable a couple of months ahead. So that is very highly correlated with the macroeconomic environment that is currently, I think, from Jeff, the things appear to have changed. The economy is becoming more stable. I think the fiscal is improving. And what do you see in down? The exchange rate has stabilized. People gain confidence. So again, seen from our data is that loading has now been replaced with most of even if they are not very sophisticated, but we are able to see a lot of transactions. we're able to see corporates that are engaged, FX swap, transact banks, and this is increasing. And so this is quite an interesting phenomenon. So at least in itself becomes a machine contributing to the bit of the foreign currency. I'm trying to say here is that stability of the environment matters. Two, once you bring this, needs to be maintained, and what public policy as well as the behavior of the private sector. So let me stop there for now.
Okay, thank you very much for that. You are the chairperson for the Bankers Association. Took note of your comment on interest rates in the market. So before I move on to my next question, Professor Sasa, your thoughts on that very topic, our market, on the market depth. Yes, please.
At the end of the day, the extent to which the economy is going, you have to the base. The macroeconomic fundamentals now suggest that something is emerging. We have seen some challenges prior to the new administration coming in. A good number of instruments have been put in place. Some have been made that suggest that the market is open. But having said that, one has to listen a little bit more attention. The private sector woes. Some of the challenges where feel regulatory environment, even the incentive regime, incentives are not sufficiently attractive to provide the requirement floors. Also, just general confidence, especially at the level of the sector. If you look at the private sector, such for the last 5 years, has actually led to a situation where things haven't been, finance in particular has been constrained. Not only in terms of the robustness of this, but also just the extent to which there is financial. Yes, we have seen, especially in terms of the platforms, especially the IT platforms that have resulted in success financial markets, access, especially companies. We are talking about a segment of not sufficiently accessing what is required for them to make a difference. Macro economy is important, but the facilitative environment within which the private, including access to finance itself, we are going to see much at this level. I'll stop here.
For Sasa, we will touch on the subject financial inclusion in a short while. Question still under market depth pillar goes to the SEC, Mr. Nonde Silima. Okay, so the domestic capital market is seen as shallow, low activity for trading. There are very few issuances, and there is no trading in corporate bonds in this market. Struggled here. And what is the SEC doing to help market? I know as you speak to that, you may also touch on the capital markets master. Okay.
Thank you for that very important question. I've been with the Commission for quite a while, and I found that around the table. One of the issues markets exist to facilitate long-term capital to for those entities that are looking for capital, and getting that investors such as pension funds and so on in this. But then because investors are primarily driven by return, there's an inverse relation the government borrows, showing that private sector is actually benchmarked to the rate at which the government is. Past so many years, I think general government bonds, government treasuries have paid a monetary. For me, who's coming as a private sector, theoretically never default. So my just me from issue a corporate bond. And in a similar way, it also discourages me from going ahead to issue an. So it, in that comes to borrow, and obviously it's got this appetite that it has because it needs to fund various governments. But on the other hand, then that to have a crowding out effect in terms of the cost of borrowing for capital markets. So
Like you wanted to
yeah. So the other to touch on. So we haven't started as a commission. Obviously, you mentioned the capital markets master plan, not a commission document. It's a document for Ministry of Finance. One of the questions that they have to answer, this crowding out effect of government borrowing drives to some extent, it's a tricky question. This is a question that he has to answer every day because on one hand, he needs to the budget, and on the other hand, he needs to ensure that MP, one of the things that we need to address is the funding model, both for other than the traditional products. I know you mentioned
at some point shortly. So, and we'll come back to later. This is the regulation. So, Mr. Chikuba, Zambia is among the highest scorers for financial information or incentives in the index countries rate and on interest. Do you see this as something, would you support the other countries in the index?
Good afternoon. Always a pleasure being at so much information that comes. I think the most important thing and what we have undertaken to do, very good reason that your fiscal, you have more predictability and what is that in the maturity, which was mentioned by the central bank and the level Professor Sasa, get back growth, and to get back those, they are going to reinforce fiscal sustainability in the country. And we've been very clear from a that taxation going forward should, and you will tax going forward. On your question on with what is at a low, but at some 10, therefore going forward. To these one-off increments in terms of cause the environment in terms of the withholding tax to have different rates for different products that to take advantage of opportunities. More reasonable sustainability, which has been established in 2022, in that tax rates shifts in terms of rates. So yes, you will see a lower withholding tax.
That lovely point that we will see. Let's have one other question in so Zambia has that in the presentation from Mr. Jeff Gable. Across to the other countries like South Africa, Mauritius. Can't hear you from here. I think why would seek from to be able to access and the fact that
through capital financial. In many ways, it development of the local capital market, but also and we know that well. Part of that process funding to that. So corporates that are actually seeking these global ratings to borrow externally and access external over the last 2 to 3 years. Spoken how to see the recovery process and that Director of Finance Bank highlighted what Isaac spoke about. There's two parts elements as well, and I think I liken it to, you can bring environment set been created. So I hope that. So transparency and Madam Charity, whom we've forgotten about. Number 5, Mr. Chikuba. They still on
progress, we've made progress with the prerequisite. Um, the IMF for you to unlock the debt under the common framework. We've had the pledge for to make the of it. So clearly twice what we should be carrying. So the idea is to bring back those matrices within that. And once that is done, we are reducing domestic borrowing this year. We are 5.7% of GDP. That reduce this in the next target statistics are available on the economy. If you go to our website now, I think almost all statistics are by law provided. For that, and economic indicators have generally improved. What is your view? Do the real growth prospects for the country like which more
on anticipation on the basis of the pronouncement of the thing, because in terms of demand, expensive. We've seen major export and most importantly, as I conclude, the permanent settlement are getting through the common framework with multi private sector, private on. We are seeing above 3% GDP. Percent GDP growth, which would be greatly appreciated. PS, at this juncture, you are there as long as in my random order, move to number 4. I think it's a chance for the generally, which is quite top. And about financial inclusion in the country, everyone general inclusion. You come from FSD. Yeah. But if
Our mandate is to work with our role is to work with the regulators
as I said, PI, the pensions and insurance, with the policy starting 6 years back. We're talking constraints included who was doing cash in, cash out, how much it was quarter, I would have to pay 20 more retail, many small amounts, a matter of the cost has now one, even language barrier would be a problem for someone to walk into a bank, even to the people where they are opening little boats. The agency banking regulator to strike proved to be very important. Also, we have awareness. We did for the kind of approach where we want to see financial markets also touch the youth are now the loan say this is available. That's not just to teach people what it is to serve, what is a budget, how sorts of different financial.
It's interesting because this question, well, we pretty much ask them this question every year. And uh, it's interesting to get the uh, for
quite lowly that there will be some improvements. Yes, I believe so. Because one of the things that we're just not talking to one step
I think has increasingly become integrated with global economy. So things that are happening in the global economy in 2015 we have the global financial crisis going into 2018.